They just want to keep individual investors out of the market. And the way that they do this is they throw a lot of really what seems like complicated jargon or terminology at individual investors just to make it sound like they know what they're doing and you wouldn't have a clue even if you tried. All right, today we are going to talk about some stock market terms that are actually not as complicated as they sound. So one of the things about stock market investing and working with brokers or portfolio managers or whoever wants to manage your money, they always throw these huge, large terms at people, and they do that for a reason. They want to keep individual investors out of the market. If you've seen my podcast episode recently, I talk all about this and how brokers and fund managers and institutions, they just want to keep individual investors out of the market. And the way that they do this is they throw a lot of really what seems like complicated jargon or terminology at individual investors just to make it sound like they know what they're doing and you wouldn't have a clue even if you tried. That is not true. That is not the case. So for today, let's go over 5 stock market terms that sound way more complicated than they are. My name's Jody Jacobs. By the way, I just want to let you guys know I am the founder and CEO of MarketStart. I have also built a multiple 7-figure business from the ground up in Los Angeles, California, and we are still growing. But my real passion is, well, I'm passionate about my business, but I'm also just extremely passionate about the stock market. I've been investing for over 20 years. And one thing that I really found is that people are just lost when it comes to stock market investing. So I'm here to help investors like you succeed, grow, and manage your own portfolios. Okay, so the first 2 terms that we are going to go over together are bull market and bear market. There are sayings in the market, whenever they talk about the market is bullish, that means that the stock market is going up. It's a positive term. It means good things about the market, granted that you are hoping and wanting the market to go up unless you're on the short side. But the bullish term, bull market, means we're in an uptrend and the market is trending favorably. Bear market means the exact opposite. So you have bulls and you have bears. Bear market means that the market is on a downtrend. It means that the majority of the overall market is going down. So they, again, just terminology that is really so simple to understand, but they make it sound complicated. So again, you have bulls, which is good. You have bears, which is generally bad, again, depending on the way you want the market to be moving, depending on which side you're on. You might hear them on the financial news talking about how a fund manager is generally bearish. That means that they like to short the market or they like to short stocks. They like it when the market is going down versus when you hear about an investor, which generally I think overall the news wants you seeing that the market is going up. So they don't talk so much about the market being bullish because they generally overall they're speaking in terms of the market is going up. And of course, you know, bells are going off, everything is flashing red when the market is going down or when it's bearish. So you will overall just hear them talking about the market going in a bullish direction, or you won't hear them say that term as much because they think that everyone is projecting the market to be bullish. And just on a side note, you can make money in both directions. The third term I want to go over is index. And this sounds complicated because index can mean so many different things. But when it comes to the stock market, they are basically talking about a group of stocks. So you have the three major indexes, which is the NASDAQ, the Dow, and the S&P. And all those basically are groups of stocks. So for example, the NASDAQ is a group of technology stocks. And then the Dow are basically the best performing stocks. So again, really simple to understand. An index is just basically a group of stocks. Now, the indexes that I just talked about, the S&P, the NASDAQ, and the Dow, those are the major indexes. There are a few more, but just to make it simple, I'll just talk about the Dow, the S&P, and the NASDAQ. But there are other smaller indexes as well. And fund managers will have their own indexes or their own basket of stocks. A lot of them are called ETFs or exchange traded funds, which are also just kind of indexes on a smaller scale with a smaller amount of companies. So again, very simple to know. So the fourth term I want to talk about, which is a lot easier to understand than they make it sound, is volatility. And you will hear investors, institutions talking a lot about how the market is volatile. And what it basically means, or what they basically mean, is that it's switching in each direction pretty fast. Or they might be talking about a volatile stock or a volatile company. A great example of a volatile stock is Tesla. Tesla is incredibly volatile. And what that means basically is you will see Tesla some days move from going up between 8 points and 30 points on one day, or $8 and $30 on one day, or you'll see it going down between 8 points or $8 and 30 points and $30 on another day. It swings up and down really fast, and it's very unpredictable. And you can spot a lot of these stocks too by just looking at a chart. If you're looking at a chart and you see that line going up and down like this, up and down, up and down. Actually, that's one thing that we talk about in Tommy's stock market adventure. That's the children's book we wrote. But we talk about volatility and how generally, and especially if you are first starting off in the market, I would say within the first maybe 3 to 5 years, look at a chart. If you see lines going like that, don't get into that stock, because it is it's very volatile. It's moving up and down really fast. And unless you have a very high risk tolerance and a lot of money to burn and a stomach for that kind of stock that goes up and drops the way it does, I would say stay away from volatile stocks like that. And one way you can do that is looking at the chart. And again, like I said, Tesla right now at this point in time is a very volatile stock. So if you don't have the stomach for it, stay away from that volatile stock. And number 5, last but not least, the word portfolio. I used to get so intimidated by this word. For one, for the most part, portfolio can go across so many different industries. But when it comes to the stock market, a portfolio is basically your personal holdings. So, or your personal account. It's the number of stocks, or it's the listed companies of stocks that you have in your own personal portfolio. Or, I mean, it doesn't have to be a personal portfolio. It can be a fund manager's portfolio. It can be an institution's portfolio. It's your portfolio, or it's your own basket of stocks. It's your account of stocks. So if you had one brokerage account and you had Netflix, Facebook, and Apple in there, then your portfolio would just be Apple, Netflix, and Facebook. So super simple, super easy. There you have 5 easy terms that really a lot of money managers, fund managers use to make the stock market sound more complicated than it is. So there you have it. My name's Jody Jacobs. I am the founder and CEO of MarketStart. If you've lost money in the stock market, or even if you are just looking to get started, download my free guide on how to get your stock market losses back. And if you have any questions about anything that I talked about today, feel free to drop a comment below. Thanks, guys. We'll see you soon.